3.
Check the microphone.
1. I think we're ready.
Yeah, we are
Perfect.
hot. Awesome.
We are hot.
Hey, welcome to Suzilla.
Hey, it's Matt.
And Suzie. Hi.
Hi. And we're going to talk about something that we impacted our lives
Okay.
that we are usually kind of quiet about, and that's life insurance.
Oh, yeah. Life insurance is one of those things that is awesome and useful and helpful. And even though I'm still wrapping my head around it.
Well, it's
as an agent, I'm still wrapping my head around it.
As an agent, you're wrapping your head around it.
As a consumer, love it.
Well, yeah, it's both of us have had, life insurance stories when we were early.
Yeah, it's true. It's true.
When I was in my 20s, 93, I think it was.
Oh, right around somewhere in there.
So yeah, it was before gray hair, and I had hair up here.
A big curly mustache.
Yeah.
I'll show you a picture sometime. It's awesome.
Yeah, my father passed away, and he had a bunch of life insurance policies.
Oh, lots of little ones?
Yeah, there were like increments of like 20,000.
Were they whole life or term?
They were whole life.
Okay.
He had the foresight to kind of stack it up throughout the years. Mm-hmm. 2 went to my stepmother.
Mm-hmm. Good.
And then 1 was split with me and my brother and sister.
Very cool.
So I gotta, kind of sort out what the heck was going on with me being the oldest male of my family at 23.
Yeah, and you were just out of the service.
Mm-hmm.
And so you were in a major transition point in your life.
Yeah, it was one of those crazy points. I know my brother and sister, they did really well, and they went to school using it. Mm-hmm. I used it to kind of figure out where my headspace was going to be. Mm-hmm. I did a lot of poetry. Yeah. That was one of those things. It helped me be a professional poet for about 5 years. Yeah. So we're not talking a huge amount, but it kept me going. It got him buried. Yeah. We didn't have to pass a hat.
No, and that's always nice.
And so that was huge. Now you mm-hmm. had, later on you had your mother pass. Your father passed.
My dad passed first. Almost 10, it would have been 99 or thereabouts. Mm-hmm. And he had a life insurance policy. He also had a decent pension. So the pension kept my mom afloat for many years, but the life insurance policy, went to my mom, and she split it between myself and my brothers and her. Mm-hmm. We all got a little chunk to, I paid off debt mostly. Yeah. Honestly, all I did, I got a new couch.
Yeah, that was a big issue. That was kind of important, and because that was right around the time I was coming into play.
That's exactly right. You were moving to Wenatchee. I was seducing him.
Yep, and
I imported him.
And so that was your first brush with life insurance on the recipient side. Yeah. Later on, you used your. Now you've got a whole life policy.
I do. I have a whole life policy about when I was 26. My brother was trying. To be fair, my dad was an agent for New York Life for almost as long as I can remember. When I was very little, he worked for GTE, mm-hmm. and then when he quit that, he picked up life insurance. He was working as a captive agent for New York Life forever. And my older brother was taking a swing at it at one point, and did what a lot of life insurance agents do in their first few weeks is mm-hmm. hit all the friends and family. Yep. I was 26, and young and had a little extra money to throw around, so I bought a policy. Got myself a nice fat whole life policy. And I've been sitting on it ever since, and I'm so glad I did, because there's no way I would qualify right now.
Because not everyone qualifies for life insurance.
No, unfortunately not for whole life policies. And what they do is they underwrite you. They ask you a bunch of health questions, and they have the right to say, nah, you're too big of a risk, and not insure you.
That's up to a certain point. Because
there are different variants.
Because after you turn 50, you got some guarantee issues.
That's true. There are definitely opportunities that you can purchase a plan that doesn't do the underwriting.
Correct.
You just have to find them.
Yeah, and that's one of the things.
And oftentimes you pay a little more for them.
You do. Usually they're smaller amounts.
Yep, but those smaller amounts are usually enough to settle an estate. In a sense, at least get the funeral done.
Yeah, that's the big one, is to get the funeral, at least the funeral done, and
maybe pay off some bills,
pay off some credit cards. Because if the average consumer's got at least $7,000 in consumer debt, and if you are a spouse, the credit card companies are going to come back and say, "Hey, you're still responsible for the $7,000."
Yeah, you can't just write off debt because you're dead.
Yeah, and it's
especially student loans.
Student loans,
credit card debt,
medical debt.
Yeah, a lot of debt will go to your estate.
My father, when he died on the 28th of February. He actually had to pay back, his estate had to pay back his Social Security check.
That's just cruel, man.
It was one of those
you'd
things.
think it would be after the 15th you'd be fine, but no, that's not how it works.
Yeah, it's not how it works. It was one of those, hey, congratulations, and here's a kick in the shins by the government.
Yeah.
Yay
feds.
Yay feds. But it's one of those things that does occur, and unless you've experienced it, it could be a rude awakening.
There are some surprises that can absolutely sneak up on you when that happens. When somebody passes away, there can be some real shocking surprises that you didn't realize was going to happen because no one ever teaches you about it.
Yeah, and that's kind of why we were talking about this today. Is there's not enough people having this conversation of like, okay, well, why should you have a life insurance policy outside of work?
Well, because you probably aren't going to be working there for the rest of your life. That's your number one reason.
There's your number one right there.
Yeah, I mean, if you're working, it used to be you could work for a big corporation and you'd be there until you drop dead, or you retire and you can carry that policy on. Those don't exist so much anymore.
Correct.
They're very rare. They're not only unicorns; they're golden unicorns.
I had one of those policies.
A golden unicorn?
No. I worked for a company. They offered a policy, and when I left the company, it was a real rough pay.
Yeah. Well, it's like Cobra.
And yeah, it's like Cobra, and it got lost in the shuffle, and there wasn't,
yeah. Well, if you're having to pay the full premium and you're not prepared for it, that can be a lot of money.
Yeah.
I worked for more than one company where I had a life insurance policy through them for whatever pennies on the dollar, whatever it is, but for that $25,000. Well, that's great, but I didn't die there. So it just basically, the money, it just went away.
But it's a good cheap toehold.
Oh, it absolutely is. A toehold's a good way to put it, because accidents do happen. People do keel over when they're on the job. But the fact of the matter is, not everybody is going to die when they're working.
Correct.
Hopefully you will retire first.
Or you will go out and become self-employed.
Yes, also an awesome option. There's a lot of reasons why.
For instance, we're here in Wenatchee, and one of the FedEx guys driving around who bought his route has used his whole life policies. He's taken loans out on it, and that's how he got that FedEx route. Whole life policies are a very unsung hero when it comes to financial tools. It's a tool, and it's a tool for while you're alive, to do loans and stuff, and you can fuel them, and they can become personal banks. Yep. You got to be, the first 7 years is where you don't want to overdrive them. No, you want to basically buy it, pay the premium, and leave it alone as long as you can. Yeah, it's and let it rack up. On average, they rack up. It's usually about a 4 to 5% interest rate on the back end. Yep. And after that 7 years, you pass that 7-year test, and you can start really funding them. And because if you break that 7-year test, what happens is it becomes identified as a truly financial tool, and you don't get the tax breaks. Because there's some tax breaks involved in that, and that's why whole life is a useful tool versus term.
Yes.
Term is the other thing that gets thrown around.
Let's do a quick. Why don't we just quickly? I do terminology as to what term versus whole life is.
Okay.
So a term plan is you purchase the plan. It's usually a lower premium, and it is set for an X number of years. You pay the premium for X number of years, 10, 15, 20, sometimes 30 years. They're term policies. And if you pass away within that period of time, your beneficiaries get the money.
Yeah.
Right? If you don't, then the policy will expire. You can roll it over. A lot of times you can roll them right over. And then it just goes away. If you don't roll it over, it just goes away.
And sometimes you can also convert those to a whole life.
And converting is also possible. That's actually a strong option. But if you don't convert it, if you don't roll it over, it just goes away. You spent the money to protect yourself during that period, during that term, and then the term's over.
So it's like basically paying rent for an apartment.
There you go. That's a good way. That's a very good analogy. If you, say you're 50 years old, you want to buy a term policy, you might want to go for as far as 30 years because you'll probably keel over before 30 years happens before the odds of you making it to 80, 85 are reduced.
The underwriters would have to agree because I believe the average age spans right around 77.
It is under 80 years old for your average person these days. Now, a whole life policy, you purchase it, you pay the premium. Sometimes they creep up as you get older because they age right. But the policy's permanent. As long as you keep paying the premium, you're going to have it. It's not going to expire. You don't have to convert it. You don't have to roll it over. It's just there, and then you're racking up. You're actually building up that 4 to 5% interest and creating a little financial bank that adds to the base benefit. Like, for example, if you had a benefit, you bought a policy when you're in your 20s, like I did, and say you bought a $100,000 whole life policy. By the time you hit 80, it's going to be worth the $100,000 plus all that interest.
And what you want to look at is what they call an illustration.
Yes. And the insurance companies will break that down for you. They're
required by law
They're required by law to break down with those illustrations to give you an idea of where that money will go. Now, if you borrow against it, it reduces that.
Yes.
And there's no question about that. But then if you pay back, it goes back.
Or if you overfund it, is another way that you can have it grow out.
Exactly. It's funneling money into there. Now, I am not going to talk about tax shelters.
Correct.
Because we are not tax people.
It's one of those things that you really want to look at a retirement planner.
Yes.
We've got some tools. However, the retirement planner can say, okay, you've got this in mutual funds. You've got this in stock. You've got this in gold. We want to add a life insurance policy. And they're the ones you want to communicate. You really want to work with. Not enough people work with their financial planners. We happen to have several that we work with, and then send people to us.
We're referral partners. We send them back. We go back and forth.
We go back and forth. And the reason why you want to talk with them is they've got a skill set.
Yes.
They're your experts.
Yes.
Never hesitate.
I have a specific skill set.
Yes, they got to train every year, and you want to have someone that you're comfortable having a conversation with.
Exactly. And they can say, okay, go get a life insurance policy, and they might show you something that they have access to. If you come to us, we'll show you things that we have access to. And you may find, and the important thing is to shop to find the one that suits you best.
Yeah, and they can turn around and say, okay, yeah, this is the policy I'm suggesting. This is, how much you pay. This is, the company rating. And if it's a whole life, here's the illustration. And you can still go shop. Yeah.
Yeah, you're under no obligation.
And that's the big thing is shop it. What we did was we turned around and we devised we created an exchange.
Well, we didn't create it. We connected with the team who created an exchange.
Correct.
And it's awesome.
And we wanted to make something as easy as possible for people to shop and say, oh yeah, this is what I need. What are my different options?
Exactly. And this exchange will offer a dozen or so different companies. It'll narrow it down to plans that will cover you with your age and your height and your weight. They always check with height and weight. That's our first line.
That's our first level of underwriting.
Right, first line's like height and weight. They'll check that and they'll bounce it around and say, okay, these companies will charge you approximately this much. These companies will charge you approximately this much. This is your rating. This is your option if you want to go to a whole life. If you want to look for a whole life policy with and without long-term care coverage.
Yes, because there's, like I said, there's little tiny variables, tools,
and that's why an expert's very handy for that. Because we work hard. I'm still working hard. I am still working hard to learn all the little tricks and how to describe what's going on.
Yeah, it's one of those things that's one of the things out there that's being popular among the agents is mortgage protection.
Yeah, exactly.
And that is, we have a tendency here not to sell a policy that's decreasing in value.
Yeah, we like to
and that a true mortgage protection plan is, for instance, you have a house loan of $300,000, you get a policy for $300,000, and it's got a decreasing value that keeps pace with it. We, on the other hand, believe in that, hey, you know what? Just keep it that $300,000 all the way through that mortgage term. And that way your spouse, your kids have got resources if something goes fluey 15, 20 years down the road.
Exactly. And that's one of the things that there's actually on our aggregator, there's a calculator for that.
Oh yeah.
It tells you how, okay, if you punch in, here's your debt, here's your mortgage, here's this, and it calculates out. This is how much we would suggest that you apply for.
And it's one of those things I don't recommend, if you're able to do that full amount, woohoo. Most people can't.
No.
I'm realistically, I'm one of those, I'll still get a can of tuna. I'm cheap that way.
Yes, you will.
So if this is a case where one can is better than 10, than no cans.
Yes.
And that is
even if it's $25,000, that's better than nothing.
Yeah, because what happens when someone dies is, there'll be the inevitable, oh my gosh, here's the GoFundMe site.
It's not inevitable, but it's becoming more common.
It's more common.
Well, if it takes someone by surprise.
Okay, all deaths are surprise. Even my dad, who had terminal cancer for 3 years, he still bought a new wardrobe that December because he thought he was going to beat it.
I think some people, you know what? Let's have another conversation about that another day.
Okay.
Because that's philosophical and that's how we're going to do. But most people do find that deaths take them unaware.
Oh, completely. It's one of those ones. It's, you never know when a car is going to crash through your building.
Yeah. Unfortunately, that has happened. It happened recently here in Wenatchee. And unfortunately, 2 people passed away, and one is still in the hospital with serious injuries.
No, and
at least one of the people who died has a GoFundMe set up to get his remains back to his mom.
Which kind of brings me to the, there was one instance there that also gets talked about in very hushed terms. It's one of my favorite Walmart stories, and that's a key holder policy.
Key holder policies are really valuable when you're dealing with small businesses, even big businesses.
Well, it's one of those things I thought about, when over this course, and we had a partner that developed COVID, and it's like, oh my gosh, what happens if he dies to the agency? What will happen?
Yeah.
It's like, is there a key holder in place? Because it'd be impossible to replace him. And we'd certainly need, a little bit of head start for funds.
Yeah.
And that was one of those things like, I should probably have a key holder on him. Just to, sort through some of the chaos that occurs in death.
And especially we're trying to figure out when you've got owners, especially if it's a partnership, you want to make sure that everyone is kept whole during the transition process. And that's what that can be helpful for.
Oh, yeah.
Keeps the payroll going, keeps the lights on, keeps the clients taken care of. There's a lot of reasons why it's a very valuable tool.
Yeah, and it's one of those ones that when you have a working partnership, and I'll have to say working partnership because this is going to bring me back to that favorite Walmart story.
Yes, I was hoping you'd get there.
There was a point, I believe it was in the 90s, that Walmart got kind of crafty. And the folks that are there at the door greeting people?
They're actually called greeters.
They're actually called greeters. I think they discontinued the practice.
I don't know. I think they didn't want to pay them anymore.
But yeah, a Walmart got crafty and said, "Oh, we're going to make them key holders, and we're going to put $100,000 life policy on."
And generally, they were folks who were senior citizens.
Correct. So they could get a policy for because it was a large corporation.
Very big corporation.
For $100, $200 a month for a large sum of money. And if they died, they would cash in on that policy.
Mm-hmm. If they died, now did they have to be still employed by Walmart?
As long as Walmart kept paying the premium.
Even if they retired.
Yeah.
Okay.
So it was one of those things that if you've got someone that says, "Hey, I want to have a policy on you," you want to make sure that you've got ownership of it.
Yeah, because what was happening is most of these people who were insured didn't even know this was happening.
No, they just go in, sign off the paperwork, for their annual benefits program.
Mm-hmm. Didn't even think twice about it.
And they didn't get it explained to them. It's like, oh yeah, this is a key holder policy. This, in the event you peel off and die, we can replace you.
No, they did not explain that to them.
Probably not.
No, here, sign this.
Yeah, but that's my favorite Walmart story when it comes to life insurance and a key holder policy.
Yep, and that's, even if it's not illegal, it certainly is unethical.
Correct. There are laws that govern the insurance industry that are incredibly important to keep that sort of thing from happening.
Exactly, and that's it. That's just dirty pool, man.
Mm-hmm. And it's I kind of thank the laws because it keeps the industry clean.
It certainly does help. Now, there are times when things do go south, but then the Office of the Insurance Commissioner steps in and goes, "You're in trouble, and then you're in trouble, and you're going to have to pay all this money back."
And that's why.
And by the way, you're going to prison.
That's why you have a regulatory governing body.
Exactly. That's why you want to make sure you deal with legitimate companies, because if you're just dealing with some guy who says he's an insurance agent, you could be in trouble because they're not going to be regulated.
Well, that's an important question. How do you find
a legit person?
How do you first of all, you make sure that they're licensed. You
have the right to ask, "Can I see your license?" And it should be displayed prominently in there. If they have an office or in there, if they're just a door-to-door guy, they should have it on them.
Well, more importantly, you want to look it up at the Office of the Insurance Commissioner.
Oh yeah, there you go. The locals, their state Office of the Insurance Commissioner will list their agency
on their site.
They are required to by law.
Well, it's not that they're required to. They list them. And more importantly, they will say if there's any actions against them.
If there's any complaints or actions or regulatory censures, then it's right there.
Yeah,
right there.
Yeah, we've run across people that have been quote unquote practicing in our state that weren't licensed in our state.
Yeah, they were licensed in another state and still trying to write policies in this state.
Correct. That's a big no-go because that's. The reason why you want someone licensed is because if something goes south, you've got a backup in the insurance commissioner.
That's right. And if you do run across somebody who is trying to sell you something that's not licensed in our state, then you need to tell the insurance commissioner so he can kick them to stinking out.
Yeah, because it's protection. It's protecting people.
Exactly.
We actually had a case here in Wenatchee.
Yeah, that was just
where someone was taking large sums of money from older folks and not depositing them into the insurance policies.
Correct. He was taking the premiums and pocketing them.
And I think they're up over $250,000.
It was some pretty big numbers. It was not pretty.
Yeah, that's where you start to see like the retirement funds and stuff. That's where the fraud occurs on the life insurance side. Usually it's with annuities. Yeah. Because you're rolling over that 401k and say, okay, I need this 401k. I still want the tax benefits for it. Where's the money? And you want to make sure it goes to a legitimate company.
Exactly.
I've had some that are, my oldest one's running like 8 years or so.
Oh, the annuity you're helping with?
Yeah.
Something like that.
Yeah.
Pretty much since day one.
Yeah. Every so often they check in and say, hey, I need this amount. It's like, okay, here you go.
Annuities are nice for that. That is another podcast.
Annuities are another podcast.
Yeah.
But it's how you find insurance companies is talk to your friends.
Yes.
Say, okay, who did you work with? Who did you like? Look at their reviews. Reviews are telling. Reviews are telling. Did they, are they current? Are they even online? Have they been in business, more than 3 years? That's
now there are times when you're going to want to support a new agent, but be careful.
It's one of those ones that
make sure that
I like new agent energy. However, sometimes they don't have the
skills,
the skill set needed. It's one of those ones you want to talk and interview your agent. Yeah.
Make sure it's a very intimate relationship because you're talking about life and death, literally, and you want to make sure that you've got a relationship that is comfortable, that you trust him, that he trusts you, she, they, pick a gender or not. Yeah. That you have this trust relationship because you know that this person is going to be handling very important and private things.
Yeah. And
if you can't trust them
and have that conversation, because they've got to be there in your darkest hour, helping out people you love. And do you want the guy that's the person that's going to Vegas every other weekend and
enjoying and being in poker tournaments? Or do you want someone that is tried and true and is going to be there for your loved ones? You encounter every so often your dad's former clients. Yes. And they loved him.
Oh yeah. And and 30, 40 years later, we still hear stories about it.
And then one of the things that he did do was, and his company, New York Life, did a good thing here, is they made sure that his policies, when he passed away, were handed on to another agent that had experience with that particular group. So they went to, locally, he went to a guy named Everett Geringer. And he's my agent now because of that, because my dad was my agent. That's the benefits of working with a well-established company. Yeah. They take care of their clients regardless of who the agent is.
And New York Life, they've been around since the Revolutionary War.
Absolutely. They are one of the first ones to be part of the United States.
Yes, they're one of the three companies that actually was here in the United States when it was in the Revolutionary War times. Right.
There's some newer ones out there, and there's some that are ancient, and they all have pluses and minuses, and that's why we would help you shop.
Don't expect me to pull out the obscure detail like that every so often on every company. I know a bunch. Just because he
has a head like that. Yeah. All right. So
we're gonna call this wit. So
it's been 30 minutes, so we're gonna.
How would you summarize someone that thinks they don't need life insurance.
How would I sell them?
How would you say? Yeah, how would you not? It's
not a selling thing. How would I explain why a person should have life insurance?
Mm-hmm.
Oh gosh.
Why is life insurance important?
Well, life insurance is important because you want to take care of your loved ones.
Okay.
That's the primary reason to have life insurance, is to make sure that you keep them afloat when you're not there. How about you? What would you say?
Life insurance is an extension of the family.
Okay.
Whether you want it to, the family to curl up and, face a stack of bills, or you want it to curl up and remember the good times.
There you go. So it's all about the family, isn't it?
It is all about the family.
Yeah.
And it's not necessarily the family you have today. It could be the family that you have tomorrow.
And it may not be the family you're blood related to. It may be the family you choose.
Yes. But that's another comment.
That is another conversation. So thanks for joining us on Suzie today. It was lovely to see you.
Yes.
And have a great rest of your weekend, rest of the month. This February is nearly over.
Yes.
Yes.
Bam.
Thank you.